what's up, guys? So finally, after a long time, we are back with another video. Okay, so in this video, we are going to talk on the IPTA cycles. Okay, if you're unaware of the topic, this is compulsory topic, but that's a kind of basic topic. Okay, but you must know about it if you don't know, if you're unaware of the topic. So that's going to be IPTA cycles. Okay, so before getting into the video, we must be understanding what are the IPTA cycles. Okay, so the IPTA cycles are the algorithmic cycles that occurs repeatedly in the market. The market never stays in single phase. Instead, it consistently transitions through different stages such as consolidation, expansion, retracement, and reversal, each signaling what is likely next to happen. Okay, so that's a kind of diagram, but there's another diagram too, which we are discussing in upcoming slides. Okay, so we have the cycles, which are, I already told you, consolidation, and then expansion, like that, okay, and then retracement, and then reversal, okay? So what is the consolidation, which is the first phase of the IPTA cycles, okay? So what is consolidation? Everything starts with consolidation. Consolidation can be described as accumulation of both buy and sell orders, okay? During this phase, the market does not trend in single direction. Instead, it is just consolidating up and down, okay? It's not going to have any trend, not up expansion, not downward expansion. There's a single phase just collecting orders in the market, okay? But instead builds liquidity on both buy and sell sides, okay? So we look for order block, fair value gap, or any other PD array inside consolidation. So we have that range, expansion. We are going to just calculate the 0.5% for dealing range, and then we look for retracement into it, okay? So our focus is going to be the fair value gap below 50% of the dealing range, our order block, or any other PD array we look for, okay? I'm going to give you the examples, okay? So then the phase, which is expansion, comes next, okay? After consolidation, the next phase is expansion. Once price breakout, it often makes a strong directional move towards a key level, okay? Expansion happens from an order block. We look for order block at the level of equilibrium, okay? There can be order block, there can be fair value gap. We look for the order blocks here, maybe sometimes here, because if we calculate the leg, there is a 0.5% we see below, and then we look for the reversals off of it, okay? And then there's a thing comes which is called retracement. So if you see consolidation, and then we had expansion, and then we got retracement below 0.5% level, and then we are just going to go, okay? So retracement is when price moves back inside a trading range. So there is a range, okay? Price comes below it, and then that's what we call retracement, okay? We look for liquidity voids to offer fair value, okay? Now there comes a reversal, which is the last stage of the IPTA. Reversal is a directional change in price. Price moves in opposite direction either after stop runs or filling imbalances. Okay, so we might have the stop losses below the low. Maybe there could be low. Okay, there could be the fair value gaps, imbalances. There could be order blocks. Okay, so yeah, we look for reversals off of that. Okay, and then we have to understand what is necessary to do in the markets. After understanding these all phases, what can happen and what cannot happen, okay? So we look for old highs, old lows, and unfilled price fair value gaps, okay? Which we have talked. So now, how to actually element a trade setup? So elements to a trade setup. Price never goes from consolidation to reversal, okay? Price never goes from consolidation to reversal. We have to keep that in our mind. Price never goes from consolidation to retracement, okay? So there is a thing, either can be consolidation to expansion to retracement and then reversal. We cannot go from consolidation to retracement, or either we cannot go from consolidation to reversal. We only can go from consolidation to expansion, and then there might be retracement or either the reversal, okay? So these are the two only things we see, okay? Consolidation, then expansion, retracement, and then reversal. Or either consolidation, expansion, and then reversal. Okay, let me show you the examples how it looks on the charts. Okay, so there's the chart example of consolidation, expansion, retracement, and then reversal. So there you go. We have the consolidation, we look for expansion, and then we have a somehow retracement after that expansion, and then reversal. Okay, so this is the chart example here. We have consolidation and expansion, and then we have reversal. We have that fair value gap, little fair value gap. Okay, price is just offering, and we have the 0.5%, 50% level of the leg. Price comes below it and just trading off of it, and we have the reversal. Okay, and you can see we are going to take that old highs. And there is another example: consolidation, expansion, retracement, and then reversal. So that's the example we already talked about. Okay, that's a whole view which is right above your eyes. Okay, consolidation, expansion, and then retracement, and then reversal. Okay, so that's the another example here: consolidation, and then there comes expansion, and then there comes reversal. Okay, so that's the diagram which we haven't talked. Okay, so that's a consolidation, and then there's expansion. We are taking old highs, maybe filling imbalance, maybe anything. There can be order block, and then we are reversing off of that PD array. So that's a chart example here, okay, which is consolidation, and then we have the expansion through this PD array, and then we have the reversal off of that. Okay, we have the shift in the market, if you see. Okay, we have the shift in the market, and then we have the breaker block, also little fair value gap. So if we look for the entries, then we must go off of that breaker block, and we look for the old highs, buy side liquidity. Thank you guys for watching the video. Hope you like it.